Hey folks, welcome back to another episode of T2 SMC Trader. So in this video, I'm going to explain the PM session of Tuesday. Make sure that you have watched until the end, and this is how you can improve, because you will be able to compare your price action with my one. So if you can compare with someone else your price action, I believe that that's gonna help you a lot. So make sure that you watched this perfectly and you have taken some notes that is going to help you for later time. Make sure that you have given me the thumbs up and also subscribe to my channel if you are new. In this video, I will explain the price action, and this is how you will improve a lot. I promise you, brother. Over here, all of this price action, you see, this is the liquidity, relatively equal lows. I have this plain buy sell liquidity around that area. Below this buy sell liquidity, I have this last fair value gap from 15-minute chart. Okay, so this is the 15-minute chart. This is the last fair value gap from 15-minute chart. I was expecting today market is going to go higher and to take this buy side liquidity at least. Okay, and that is why I was bullish. I've seen that some people actually told that today's price action is not good, choppy, or blah blah blah, but it was very clean. If you were with me in my live streaming around the morning session, you know that how to frame all of the setup. Around the PM session, I have done the members only live streaming, and they knew whatever I'm telling here. They are my witness. Okay, if I tell you the lie, you just ask them. They will confirm that what I was talking them and what happened. Okay, I was expecting that market is going to take that buy side liquidity. Now I don't need to see or predict the close. I don't need it. If my expectation is market is going to take that buy side liquidity, I will just look for the buy setup only. So I don't care about the sell setup. Instead of that, I will just care about the buy setup. In my morning's sessions live, I told that market is going to react from that order block, and it is actually going for this order block. Okay, so let me mark this order block over here. It is going to reach until that order block before expanding higher. Now you can see market has traded that order block perfectly. It has traded the mean threshold of that order block. So this is the 50% of that order block that is called the mean threshold. Very nice, tick by tick. It tapped to that mean threshold and then it fall. When it was falling, this was the lunch hour. We don't have anything to do around the lunch hour. So by using the lunch hour, price reacted from that order block, went lower, reached until this down close candle or this consecutive order block. If you just mark the mean threshold of that order block, that is mean threshold, which is actually the mean threshold 50% of that consecutive order block. Nobody has closed below this mean threshold. No, brother, you are wrong. It has closed below this mean threshold. I call them as a fake breakout. Okay, that is the fake breakout. One candle just closed below this mean threshold. The very next candle closed above the mean threshold. So this is called the fake breakout. At the same time, as I am not looking for sell, I don't care about that. All I'm seeing here that market is respecting this order block. Okay, so when market is over there and I'm already in the session, see this candle, this is 1 p.m. so I'm already in the session. I will start to look for a buy setup until this buy side liquidity. So now I'm going to 1 minute chart and I'm just going to show you the setup. Over here, if you see, this is that leg. I'm already in the session, PM session. Then finally I have got the market structure shift over there, but at the same time there was no fair value gap, so I can't take the buy setup from there because I don't have the fair value gap. If you take a closer look, except this market structure shift, I have the breaker block as well. Why that is breaker block? Because market has taken some liquidity. After taking this liquidity, there is the market structure shift, fair value gap trade. Market went higher, left that fair value gap unfilled. So over there, that is the unfilled fair value gap. I don't want to see market is going to fill that one, but fortunately or unfortunately, market has closed that fair value gap. When it has closed that fair value gap, I will start to look for the breaker block. That means low, high, lower low. This is the highest up close body close candle. This is going to be my breaker block, but market didn't close above this breaker block, so it's not valid. Instead of that, market has made another low, high, lower low, another breaker block. Okay, the highest up close body close candle, it's going to be my breaker block. So here, this is my breaker block. I'm going to mark that on as breaker block. This is the first candle which has closed above this breaker block. Then the very next candle come back again to this breaker block. I will take my entry over there. This should be the first entry around the PM session. We are already in the session. Our bias is bullish because I am expecting market is going to take that buy side liquidity. Market has traded this order block and the mean threshold at the same time from 1 minute chart. If you take a closer look, market has taken this sell side liquidity. This sell side liquidity has taken over there, and it has traded the 1 minute last parabolic up over there. Now, if you see there is no last parabolic up, you are wrong. Actually, there is a last parabolic up from 1 minute chart, though it's a very small, but still this is the last parabolic up from 1 minute chart. There is no other parabolic up below this parabolic up. But if I want to go little more deeper, there is the order block. I explained that to my members around the PM session. I believe that was insightful for them. I believe so. So it has taken this all the liquidity, traded the last parabolic from 1 minute chart. After that, it has made this breaker block and the market structure shift. Tap to this breaker block. I'm already in the market. Where should be my target? See this relatively equal highs over there. So I'm going to mark that relatively equal highs over here. That should be my target. Okay, here. So it's gonna be 1:2.28. Not bad. Still 38 handle. You can see market has taken that buy side liquidity. Now here is the question: if you don't know how to mark the breaker block, so how can you look for another setup? You know that market is going higher, it is retracing from the order block. You will start to look for the setup. Now this is the first time market didn't give you the setup, then you will keep looking for market to take the liquidity. Over here it has taken the liquidity again, and then it has given you the market structure shift over here. This is a very nice, clean, perfect market structure shift around that area. Okay, so this is going to be your market structure shift. Where is your parabolic up? Let me just remove this order block line and the mid threshold line from 15 minute chart. I don't need them anymore because I know market has reached until a higher time frame level. After this market structure shift, market has made this entry parabolic up over here. This is the entry parabolic up, and over here this is the breakaway gap. I'm not marking that breakaway gap, but it was a very immediate reaction. Just cover this low and target the same thing over here around that area. Now you can say, brother, it's very small target. In that type of situation, you have to mark this last parabolic up from 1 minute chart. You have to target that last parabolic up low, but in this area you have to take the partial. So there is no other way without taking the partial around that area. So you have to take the partial, then you have to put your stop loss to the break even. You have to hold it your trade until this 1 minute last parabolic gap. You just can't hold it until the extreme liquidity. Okay, I always keep saying that please don't hold the trade until the extreme liquidity. If you are overzealous, obviously you can target these highs. They are obviously relatively equal highs around that area, which is also the obvious liquidity because of the shallow run. Yeah, you can target until that shallow run. In that type of situation, after taking the partial over here, your stop loss should be to the break even, and then you will trail your stop loss depending on the price action. So in that type of situation, you can see that market has given you 44 handle. In my opinion, it's enough, more than enough. If you get that 28 handle, it's more than enough. So that was the second entry. If you didn't know how to take the breaker block entry, that was the second entry. Why you are keep looking for buy? Because of the narrative, and the day today is Tuesday. You know market is going for that buy side liquidity, so you should keep looking for buy. Then finally, I'm just going to remove them as well from my chart, and you can see around that area market reached until that area. Okay, what is that line? See this wick that has taken all the buy side liquidity, and I'm interested to mark the 50% of that wick. Okay, so this is the 50% of that wick, which is called the last parabolic gap as well. So I'm going to mark that on. Just let me mark it. So this is the consequent crossment, or the 50% of that wick. Why this week is important? Because this week has taken all the liquidity. At the same time, it has traded a fair value gap around that area. Okay, so let me mark the fair value gap from the 1 minute chart. This is the entry fair value, the last fair value gap from 1 minute chart. Okay, so let me mark it over there and there. If this week doesn't trade the fair value gap after taking all the buy side liquidity, the 50% is not going to be very important for me. But you can see it has traded this last fair value gap from 1 minute chart, so it is really so important for me. I would love to see the constant encroachment should be broken. But over here, if you see market tap to this constant encroachment, then it was started to fall. Why it was falling? It was falling because market left the liquidity over here. That was a very clean sell side liquidity, tick by tick. Okay, that was a very clean sell side liquidity around that area. Okay, over here. So market actually fall to take that sell side liquidity. After taking that sell side liquidity, market started to go higher. Over here, I told to my members that I'm going to look for a buy setup now. But for the buy setup, all I need to see a very nice clean market structure shift or the breaker block. Both of them are valid. So until here, that was my breaker block, low, high, lower, low. So that was my breaker block when I was in live with my members. So that was the breaker block, but later market has made another breaker block, so I'm going to remove this one. But either way, it was also valid. This is the first candle which has closed above this breaker block, and then when it tapped to this breaker block, you have to take your entry over there. Your stop loss will cover the breakaway gap, the breaker block mohawk, and you should target the low of this fair value gap. At the same time, you have to take the partial around that area. This high and that high, they are relatively equal highs, so you have to take a partial over here. There is no other way. You have to take the partial, then you have to put your stop loss to the break even. It didn't tap to your target, then you will be maybe stopped out to the break even, and but still you are profitable. You will get some profit. Okay, not good, but still you will be able to take some profit if you would love to use that one as your breaker block. But I'm not interested to show you that breaker block. Instead of that, I would love to show you the setup, real setup over here. So after taking this sell side liquidity, market has made a swing high which is valid for shifting market structure. So this swing high is valid for shifting market structure. I'm going to mark this one as my market structure shift. And look, when market went lower, take this sell side liquidity, fail to take that extreme low, trade that only fair value gap over here from 1 minute chart. This fair value gap has traded. It has taken this sell side liquidity around that area. After taking the sell side liquidity, how beautifully it has given you the displacement. Okay, this displacement with a fair value gap. So there is your fair value gap. This is the last opportunity to take the entry around the PM session, and it was the immediate reaction. So you should take your entry over here. That should be your entry when it tap to this fair value gap, and you will cover the candle has made the fair value gap. That candle you have to just cover that on. In that type of situation, you can target that buy side liquidity. See this high and that high, they are relatively equal highs. You don't need to target the extreme liquidity. You don't need it. You, instead of that, you can just target the obvious thing. If you are overzealous, then obviously you can hold it until that area. In that type of situation, you have to take a partial over here to that area. You have to take the partial, and then maybe you will stop, trail your stop loss. You will be stopped out over there somewhere. Still you will be profitable, and that's a very nice trade until that buy side liquidity. The risk to reward ratio is 1:2.43. Not bad. Over here, there was the breaker block as well. Low, high, lower low. This is the highest up close body close candle. Instead of that breaker block, I would love to use this breaker block for my setup. So over here, that is the breaker block as well. If you use that breaker block instead of that 22 YT model, you will just wait until price closed above this breaker block. This is the closing of above this breaker block. Then the very next candle tap to this breaker block. So you will be in the market over here. Your stop loss will cover this breaker block mohawk, and you will target the same area, same type of 1:2.55, something like that. And you can see how beautifully it went until that area. Then market actually consolidated little more over there, and then it closed over here. I don't need to predict the close, and I really don't want to predict my extreme, I mean the daily close. I really don't want to do that. My expectation was bullish, so I will only frame the buy setup. If like over here, after taking the buy side liquidity, there is a very nice market structure shift. I told my members, please don't look for sell over here. Though it's also a very nice displacement after taking the liquidity, that was a very nice market structure shift, but don't look for the sell over there because this is not logical. Because of our price action, it's not logical. So if you really would love to understand all of this price action, you have to join to my live streaming, because this is not something I can explain everything by one video. If I would love to do that, it's gonna be near about 1 hour long or 2 hour long video. So that's why I'm giving you the price action around the morning session live and around the London session. Then I'm going to complete my session by the PM session video, by a small video. Okay, so that was the first, I mean last opportunity to take buy. Here was one opportunity to take buy, here was another opportunity to take buy. All of this sell I will just avoid. Okay, this was the lunch hour. I will just avoid all of this sell. I don't get panic when I see this type of sell, because I know what is happening over here because of my 15-minute chart. So from my 15-minute chart, I'm seeing this is just a reaction from this order block. Okay, so that was just a reaction, and market reached until that low, took that relatively equal lows, trade that fair value gap. There was a bullish fair value gap. If you see this candle low, that candle high, this is a bullish fair value gap. At the same time, it has traded this extreme order block, this order block, down close candle, the order block, and then finally market is going higher. I believe that before yesterday market will take this buy side liquidity. Okay, now you can say, brother, it stopped in a random level. No, it didn't stop in a random level. I have this entry fair value gap over here. Okay, so look over here, price is inside that entry fair value gap. I didn't mark that entry fair value gap because I'm expecting that market will go through this last fair value gap and it is going to take that buy side liquidity. So that was all for this session. I believe that it will be insightful for you guys, but if it is really insightful for you, don't forget to give me a thumbs up. Don't forget to subscribe to my channel. I tried to make it smaller, not longer video. If it is longer, little longer, I'm sorry for that. So until the next video, cheers guys.